Yo, what's going on, guys? Welcome back to the channel. In today's video, we're going to go ahead and talk about something that most traders forget about, they look past and forget the importance of, and that is having a long-term portfolio. If you're trading stocks, if you're trading options, you can easily forget about the importance of having a long-term portfolio in the background working for you over time as the market naturally appreciates. If you're in your 20s, if you're in your 30s, you have a ton of time to continuously invest into the market and set yourself up for the later years of your life. Being able to live off dividends or the natural gains in a large portfolio can be a great way to retire, and I promise in 20 or 30 years you will not be upset that you went ahead and started investing into some stocks. So what I want to do is I want to show you guys my long-term portfolio, how I'm managing it, and what stocks I'm picking for it so that I can set myself up for the future. We'll do some technical analysis on these stocks, show you how I manage them, and what I've recently added to the portfolio. So if you guys are excited for the video, make sure to go ahead and destroy that like button, subscribe to the channel if you want to stay tuned for some future videos. Let's go ahead and roll the intro. So I think we can all agree that most people out there, including myself, are looking for ways to make money as fast as possible. This is human nature, and this is why options trading has become so popular. However, trading options and taking that short-term risk without any type of long-term plan or long-term portfolio is a very, very risky way to manage your money. Now, for me personally, I'm okay taking the risk of trading options because I know that a large percent of my income is going into a long-term portfolio, as well as diversifying into some real estate investments. So if you guys are out there and you're just trading options, taking that extreme risk without any type of long-term portfolio or any other way of diversifying your income, I highly recommend you take a few minutes and think about the long-term plan and what you plan to do for when you're 50, when you're 60, and when you get older. I'm truly not lying when I say this. Watching my long-term portfolio grow day by day is extremely more satisfying and exciting to watch than making a few $1,000s when trading options. When you trade options and you make some big wins, in the back of your mind, you're always guessing, am I gonna keep this money? Am I just gonna lose this the next day? It's a little bit more uncertain. But watching a long-term portfolio grow on a gradual scale is much more exciting, knowing that this is gonna continue to grow over time, and it's something that will become a really nice source of income into the future. So I hope that this quick talk just gets you thinking about the long term. It sort of level sets your expectations with options trading and gets you thinking about setting yourself up with a long-term portfolio. But enough talking, let's go ahead and break down my portfolio and do some technical analysis on the stocks that I currently own. All right, guys, so I got the portfolio pulled up here. Let's go ahead and break this down. So right now, net account value, $14,400. Total unrealized gain, $2,382, so just about 20% gain. And yesterday, which is Friday, about a 2.5% gain. Now, I started this portfolio in April. That's when I went ahead and purchased most of these stocks. So since April is how much I've gained, just about 20%. The cash purchasing power is low. Every time I get money in this account, I reinvest them into these stocks. I have $200 a week going into this portfolio, so just about $800 a month in total, reinvesting it and growing this portfolio over time. So looking at some of my holdings, I'll filter this by total percent gain, and then we'll filter it by the amount that I have in them. So you can see what's made me the most money percent-wise and what's the largest holdings in this portfolio. So right now, some of these top gainers, the two top are sports betting stocks, Penn National and DraftKings. 143% on Penn and 56% on DraftKings. I got in Penn at 28 and it's right now at 70. I got in DraftKings at 34 and right now it's at 53. Now, I really like the sports betting sector. I think there's a great future for this. I think there's possibilities of getting DraftKings in a casino, maybe a DraftKings sportsbook, something along those lines. I think they're making great partnerships. DraftKings made a partnership with ESPN. So I think the future of Penn National purchasing Barstool and DraftKings being able to expand their fantasy football is a great way to invest into the future, and I really like those two stocks. I've continuously added to them. If I go here, we can see that I started buying DraftKings in May, added some more in June, and just recently added 2 more shares. If I go to Penn, you can see that I went ahead and purchased right there in May, added in June. So I have a total of 9 shares. So I like these two stocks and they're performing really well. Home Depot, another great one. Got in Home Depot at 180, currently sitting at 268, up about 50%. McDonald's, Snapchat, RCL, RCL is a questionable one. I think cruise lines will be back. I think once the economy gets back to normal, people will have less fear. And I want to be in RCL for a potential cruise line comeback and overall just a leisure sector comeback. AMD, Microsoft, a little bit more tech exposure here with these two stocks. You guys know tech usually outperforms, and I want to take advantage of that. 3M, great dividend stock, down a little bit on Friday, but overall up 17%. Wynn Resorts, another one that I want to take advantage of for a leisure comeback. I think there's a lot of gamblers out there dying to get back to Las Vegas, and Wynn Resorts will definitely take advantage of that. Walmart, solid stock, overall good dividend, up 14%, 15%. AbbVie, great dividend stock, up 15%, but purchased at 78, sitting at 86. Starbucks, a little bit of a personal investment for me. I love Starbucks. I know there's people out the door at Starbucks every day, right around the corner here. So I think Starbucks over time is a great investment. Apple, just started to add Apple. I have a average cost of 103, so about 104. Right now sitting at 112. Have just about $2,000 into this stock here, up about 8%. I like Apple long term. I think right now is another great time to purchase it. It's been falling with the tech sector. I'm actually planning on potentially adding more Apple into next week. Verizon, great dividend stock. KO, Coca-Cola, another great dividend stock. Tesla. So here's Tesla. I just added Tesla on Friday. Now the reason I added Tesla is because I really liked the things that Battery Day had to say. Elon said some nice things about maybe 3 or 4 years down the road about taking a lot of their manufacturing in-house, being able to corner the market with manufacturing and pumping out these vehicles at a very great price point and in a quick amount of time. Elon was saying how building the actual machines that build their cars is the hardest part. It's not actually building the physical car. So building those machines, if they're able to take that all in-house and be able to corner the market, then I think there's a lot of upside to Tesla. Obviously, this one's a little bit speculative. It could go down, it could go up. But putting a small percent of my portfolio in Tesla, only 2 shares, I like it long term, and I'm going to continue to hold this. Delta Airlines, another leisure sector comeback. If airlines come back, I want to have some exposure there. Walgreens, Triple Q, NASDAQ ETF, and MO is the only stock that I'm down on. Actually, QQQ as well, so small percent, $12. And then MO is a great dividend stock, but right now I'm down on this 7%. This is where I want to cut this, or I go ahead and add more of it. If it's falling, I'll add more of it, lower my average price, and continue to dollar cost average. Looking at my estimated income, this is how much money I'll make on dividends over the next year. So right now, $291, nothing great, but as this portfolio grows, so will these dividend income. If I go over to performance and value, what we can see is how my portfolio is performing versus other indexes. So obviously, if I just put all my money in the NASDAQ, I'd be all the way up here, which is absolutely fantastic. But I wanted to be able to diversify and not be all in tech. Tech can have big downturns much more than some of these Dow and S&P stocks. So I'm not fully in the NASDAQ tech stocks, but you can see that they've greatly outperformed. That's the yellow and the orange line here. My portfolio is the dark purple line, so I'm just outperforming the S&P, which is the blue line, and I'm outperforming the Dow, which is this turquoise line. So looking at this, you can see my portfolio is up 36%, the S&P is up 31%, the Dow is up 21%, the NASDAQ Composite's up 69%, and the NASDAQ 100 is up a great 88% this year. So my portfolio is outperforming the S&P, it's outperforming the Dow, and it's now not as great as just investing in all NASDAQ stocks. So now that we broke down the portfolio, I want to go ahead, jump into the charts, and just quickly look at 4 or 5 stocks and do some technical analysis. All right, guys, so we have the charts pulled up. The top here is Penn National, right here is DraftKings, the bottom right is Apple, and the bottom left is Tesla. So I want to just break down some technical analysis on these longer term, looking at the daily charts. We'll also look at some other stocks as well. So looking at Penn National, you can see that, it's had quite a run. $3.75 back in March, and right now it's sitting at $76. So a huge run up here. You can see, looking at these lines, the blue is the 20-day simple moving average, the gold is the 50-day, and the green is the 100-day. So looking at Penn, we can see that it's been holding this 20-day pretty nicely. Right now, it just bounced off the 20 once again, So it's still pretty bullish here on this uptrend. It did sort of converge with the 50-day here and had some really nice support there. So, I am tempted to take some profits on this stock, but it's a long-term hold. It's finding support continuously at this 20-day SMA, so I'm going to continue to hold this. Looking over at DraftKings, DraftKings is a more recent IPO, so you don't have much of a 100-day and you don't have much of a 50-day simple moving average. But what we can see is it's been riding this 20-day. The 50 and the 100 are both moving higher. Right now, it's pretty overextended here versus the 20. As you can see, Penn's actually bouncing off the 20, so a little bit more support there. DraftKings, a little bit overextended here. It's had a pretty nice run-up. You could take some profits here on DraftKings if you're up on it quite a bit. It probably will try to retrace down to this 20 or even this 50 if they continuously go higher. So another one worth watching there. A lot of volume right here. That's another positive thing to look at. Looking at Apple, Apple obviously has had a little bit of a downturn here in the last few weeks. Right at the 50 SMA, it's finding support there. It did drop below it, but has been bouncing there for a few days now. I think, Apple will try to find some support here and maybe try to retest this 20. And if it breaks past the 20, it'll likely start to try to continue higher. As long as tech stays strong, as long as these election fears start to sizzle down a little bit. I don't fully expect the election fears to go away. It's obviously going to stay around. The market's going to be unstable. But long term, 2-3 years down the road, I don't see why Apple is not higher than $137 a share. Looking at Tesla, Tesla is actually a really nice chart here. You can see that it's bounced off the 50-day SMA twice, right here, and again right here. Pretty bullish sign. It needs to hold this line. It needs to break the 20 to continue higher. If it fails on Monday and fails next week and breaks this 50 and tries to head back to this 100, that would definitely be a little bit of a bullish sign. But what you guys can see, it's found support there, so it's a pretty nice bullish uptrend. Going into a few others, we'll pull up RCL, we'll pull up McDonald's, we'll pull up Home Depot, and last but not least, we will pull up Delta Airlines. So a few of these are a little bit more speculative. Delta Airlines and RCL, two leisure companies. If I zoom into this, obviously they're still pretty beaten down versus the highs in early this year. Looking at this, we're on an uptrend. The 20 is above the 50 and the 50 is above 100. So these are starting to align better. You can see in the downturn, it started to get a little messy here. The 20 was below the 50. The 20 was in between the two. That's a bearish sign. But as you can see, these simple moving averages are starting to trend higher, which is nice to see. You can see recently we just bounced off the 50. So it could be a bullish sign here for RCL as long as the leisure sector starts to come back and we don't see any type of second wave. Breaking down Home Depot, zooming in here on the chart, what we can see, this one actually looks a little bearish to me. The 20 is converging into the 50, and you can see that it could sort of break below the 50 here in just a few days. If it does that, that's definitely a little bit of a bearish sign. It was holding it for quite a while, bouncing off the 20, and these lines were starting to sort of trend higher. But right here, it looks like we're starting to break down. Home Depot's under the 50-day, and it might try to find some support at the 100-day right here. Looking over at Delta, definitely a lot still up in the air for airlines, but we can see it bounced off the 50, it wicked off the 100, and may try to find support here. Still on a decent uptrend. If we look at this line here, there's your uptrend, still bouncing off of it. Potentially more higher upside for this Delta. Still going to continue to hold it because I like airlines long term. Last but not least, let's go ahead and look at McDonald's. I really like McDonald's. Chart looks great. Really nice uptrend. Bouncing off this 20. As we saw earlier, a lot of stocks bouncing off the 50, like right here, RCL bouncing off the 50. This still holding the 20 right here, finding support, sort of bouncing around. And McDonald's has been on a really nice uptrend over the last few months. So like to hold McDonald's here. Technical analysis looks great. So guys, there you have it. There's my long-term portfolio. There's some of the stocks that I own and how I plan to manage it into the future. If you guys want to start a long-term portfolio, make sure to check out Webull. It's going to be the second link in the description below. If you sign up using that link, I get a free stock, you get a free stock. It's a win-win for both of us. Also, if you want to join my Discord chat with other options traders as well as long-term investors, it's going to be the first link in the description below. So make sure to go ahead and check that out. If you guys enjoyed today's video, please make sure to go ahead and destroy that like button for me. It'll help out the video as well as the channel. I hope you guys have a great rest of your week. Subscribe to the channel for some future videos, and I hope to see you in the next one. Peace.